Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. U.S. stock market, a rally on shaky ground. This video presents a direct informational narration of the source document.
All right, so let's get right into it. There is a really strange puzzle happening in the U.S. stock market right now. On one hand, everything looks fantastic, right? The market's holding at these really high levels. But if you look just beneath the surface, there's a totally different story. Money is actually flowing out of the market. So what in the world is going on? What's actually holding this whole rally together? Okay, so to try and figure this out, let's start with the good news. Let's look at the bull case. Why does everything seem so optimistic? Well, it really comes down to the headlines. The market has been absolutely eating up a string of really positive news. First off, there's a bit of geopolitical relief. That US-Iran ceasefire, it's been extended again. Now, it's messy, sure, but for the market, no new bad news is basically good news. Then you've got a really strong start to corporate earnings, and we're going to dig into that in a minute. But there's this third thing, a little more hidden. The trouble in the Middle East is actually making the Bank of Japan think twice about raising its interest rates. And you might be asking, why do we care about that? Well, it's huge because it keeps a very popular strategy going. It's called the yen carry trade. Basically, traders can borrow money for super cheap in Japan and then pour it into US assets that pay more. For the market, that's like having a free fuel pump for at least a few more months. And yeah, that earnings story, it's not just fluff. There's real substance here. I mean, so far, of all the S&P 500 companies that have reported their numbers, an incredible 80+% have beaten what analysts expected. That's huge. A start like that gives the bulls all the ammunition they need to say, see, this rally is real, it's justified by fundamentals, no matter what else is going on in the world. Now, if you just look at the charts, just the technicals, the market is acting like a really stubborn bull. It's pushing right up against this major ceiling, what traders call a resistance zone, somewhere around 7,200 for the S&P 500. If it can punch through that level, honestly, there's not much in its way. On the other hand, the floor, the support level you have to watch, is down at 6,860. As long as we stay above that line in the sand, technically speaking, the bulls are still running the show. But let's be real, the true engine driving this entire market, the main force pushing everything higher, it's not just some vague general optimism. No, it's something very specific, and I mean historically intense. It's a frenzy, and it's all centered on one place, AI and semiconductors. Okay, you have to see this, because what we've just witnessed is, well, it's truly historic. The main index for semiconductor stocks just had a 16-day winning streak. That's the longest ever. Think about that. In a little more than 2 weeks, it shot up by over 40%. A move that fast, that powerful, it's just something you almost never see. And this really helps put that 16-day run into context. Look at this comparison. Even back during the height of the dot-com bubble or the chip craze in 2021, these kinds of winning streaks usually ran out of gas after, 9 to 12 days. What just happened completely blows those past frenzies away. We are way, way off the map here in terms of momentum. So what is feeding this fire? Well, it's really a perfect storm of 3 things happening at once. First, you've got the big long-term story, the idea that AI is going to change the world. Second, there's a classic short squeeze. This is where people betting against these stocks get burned so badly they're forced to buy back in, which just shoots the price even higher. And third, you've got short-term traders jumping in with a ton of leverage, basically pouring gasoline on the fire. And all of this has shifted the focus from the big guys like NVIDIA to some of these smaller, way riskier stocks, and they're seeing just mind-blowing gains. Okay, but this is where the plot thickens. This is where the story takes a really sharp turn. Because while all these AI stocks are shooting for the moon, if you actually follow the money, if you see where the cash is actually going, the picture could not be more different. And honestly, it's kind of worrying. Which brings us right back to that central puzzle. If the market's at new highs and AI is in this massive frenzy, then who on earth is doing all the buying? Because the answer is probably not who you'd guess. So look at this data from Bank of America. It's pretty shocking. On the left side, you have the sellers. The big money institutional clients, they've been selling. Everyday retail investors selling for 6 straight weeks. So who's on the right? Who's buying? It's not people. It's algorithms. We're talking about systematic funds, basically computers programmed to follow trends, and market makers who have to buy as part of their job. Let me say that again. The humans are selling, the machines are buying. But, and this is a huge but, Goldman Sachs is waving a big red flag here. They're warning that these algorithmic buyers are running out of room. See that 95th percentile number? That means they're almost maxed out. Think of it like a fuel tank that's almost full. They just don't have much more capacity to buy. And that's a huge deal, because it means the main pillar holding up this market could be about to disappear.
This whole thing creates a very, very weird dynamic. You have investors selling their actual stocks to take profits, but their FOMO, their fear of missing out, is so intense that they're taking a tiny bit of that cash to gamble that the rally keeps going. And they're doing it by buying call options. These are like cheap lottery tickets for the market. This speculative buying has pushed one key measure of this froth to an extreme high, the 90th percentile. So people are cashing out with one hand, and with the other, they're making a side bet that the party's not quite over. All right, so let's shift gears and look at how this is all playing out in the real world, with actual company earnings. This is where we can see these big themes of AI hype and underlying weakness really come to life. First up, Tesla. You know, expectations were pretty low going into their report, but they delivered something much better than feared. Revenue, earnings per share, and maybe most importantly, their gross margins. They all came in better than expected. Tesla also said that global demand is starting to pick back up, which is a big deal for one of the few mega-cap tech stocks that's been lagging behind the pack. But over in the software world, it's a totally different vibe. Look at ServiceNow. On paper, you'd think they had a great quarter. Revenue was solid, they even raised their guidance for the future, which is usually great news. But the stock got absolutely hammered. Why? Because deep in their report, they mentioned the possibility of some pressure on their profit margins 2 years from now. That just shows you how jittery this market is. A tiny whisper of potential trouble way off in the future is enough to spark a major sell-off right now. And then you have GE Vernova. This company is basically the poster child for what people are calling the AI power grid boom. And just look at these numbers. They are absolutely staggering. New orders shot up 71%. Their free cash flow more than tripled. This is a direct result of the insane amount of new power infrastructure we need to build to support all these new AI data centers. GEV really drives home the point that the AI boom isn't just about selling chips. It's about rebuilding the entire power grid. Okay, so all of this brings us to what might be the final and most critical showdown in the market right now. This is the place where the entire AI story is about to be put to the ultimate test, the memory chip sector. Check this out. This is a single data point from Goldman Sachs, and it is absolutely wild. Just one company, Micron Technology, is responsible for 51% of all the positive earnings revisions for the entire S&P 500. Let that sink in. The outlook for the entire market is literally being carried on the shoulders of this one single stock. And the expectations being baked into Micron's stock price are, well, they're astronomical. Wall Street is now expecting their earnings to grow by over 600% by 2026. But the really insane part is how fast those hopes are growing. Just in the last few weeks, analysts have hiked their forecasts by another 93%. They are literally doubling down on their bets in real time. The hype here is completely off the charts. So this sets up the big debate, the ultimate showdown. On one side, you have the bulls. They're saying that AI has created a permanent super cycle for memory chips, and that these stocks are still way too cheap for that new reality. On the other side, you have the bears. They're saying, hold on, this industry has always been a boom and bust cycle. They think the low valuation is there for a reason to account for that risk, and they're not buying the this time is different story. At least not yet. And the thing is, we're not going to have to wait very long to see who's right. Two other memory giants, SK Hynix and Samsung, are reporting their earnings this week. Their results are going to be the ultimate test for this entire rally. Will they validate the bull case, proving this is a new AI supercycle? Or will they confirm the bears' biggest fears that this is all just another cyclical peak right before a crash? Everything is riding on this. The showdown is about to begin.